it's very emotion driven. If people are seeing the layer ones chopping, consolidating, a few sell-offs here and there, they kind of panic out of the meme stuff. So, you can really see where the risk curve is. But when the banana zone comes, people will just go way too far out the risk curve, and we'll see some really crazy stuff happening then.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto, the cryptocurrency bull market. Year 2024. 2025 is already underway, and much like previous bull markets, it has seen many ups and downs as well as downs. The US Securities and Exchange Commission approved several Bitcoin exchange-traded funds, ETFs, earlier this year, which marked a significant turning point for the entire crypto and digital asset space, as well as for Bitcoin, the leading cryptocurrency by market capitalization. Bitcoin ETFs have amassed tens of billions of dollars in assets, and the SEC is preparing to approve several Ethereum ETFs in September, which experts also predict will be very successful. However, there has been some turbulence in the last few weeks, which has led many to speculate about the bull market and what lies ahead for the prices of crypto assets in 2024. Due to this speculation, investors are increasingly inquiring as to when it is appropriate to take profits and exit the markets before the next crypto winter officially begins. According to Raoul Pal, the founder and CEO of Vision Profit Taking is a complex matter that needs to be timed correctly in order to avoid missing what he terms as the best investment opportunity ever presented to humanity. He thinks that the greatest way to invest in the cryptocurrency space is to have a long-term time horizon and ride the wave both during upward and downward rallies. However, for people who need money right away, Coin argues the best indicator of whether to start taking profits during each cryptocurrency bull market should be time rather than price expectations. After we reach the much-anticipated banana zone later this year, the former Goldman Sachs CEO says that he will be withdrawing some profits to cover some personal expenses for people without urgent requirements. But he advocates the buy-and-hold approach at least until 2030, by which time he thinks the market cap of the entire industry will have grown enormously from its current $2.3 trillion to $100 trillion. And lots of things Raoul Pal discusses, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
Yeah, that's right. It doesn't mean that they're going to be the best performers. There'll be all sorts of incredible stuff that ends up being better performers further out the risk curve, but this part is a trade that almost everybody can participate in and make real money in. It is really not clear what it is. How I address this is I now look at the Solana chart versus a bunch of these, and you start looking for a basing. You always look at divergences. Those would be your first signal. Then you'd look for some sort of chart change in pattern. I'm looking at those because that will be a signal that, hey, look, there might be a bigger trade here, and that could be a fun one because those tend to go truly bananas when they happen. The benchmark, it's like the major top performing asset. If you're going to allocate money to anything, it has to beat that. If not, you should keep your money in Sol. That's how I think about everything now, right? Which is why I'm hyper concentrated in Sol, because over time it has beaten all the major bets. I've owned and I still own WIF and Bonk. Why? Because they actually outperformed Solana, and the chart showed that. Does that continue? I don't really know, but that's how I think about it. It's like I'm allocating capital. I want to make the most money possible, taking the least amount of risk. Solana's a low-risk bet, but if I'm going to allocate capital further out the risk curve, it better beat Solana. If not, I'm just wasting money. I still think, I read Tolly's tweets, of which I understand maybe 5% of them. But I understand what he's talking about, which is some single-state machine versus the Ethereum version of that with multi-chains and multi-layers. I've lost you, Scott. I'm going to keep talking. So I see that, and I think there is a place for that. I then see that Fire Dancer is coming, and I think that's going to be a big deal. I think people still don't understand it. Most people have heard about it, but they don't really know what Fire Dancer is. So that's all to come. So there's a lot of positive news to come. You know, you hear a lot of kind of business development opportunities coming out of Solana. I was in Singapore hanging out with the head of business development of the foundation. You know, there's a lot of activity going on. So I'm still super positive. The chart price action looks good to me. I think it's forming a big wedge pattern. That wedge pattern, I think, breaks and breaks higher. It's like the NFTs last time around. You know, what you've got is excess saturation of supply building. Doesn't mean you won't have breakouts. Doesn't mean you won't have kind of a king of memes that survives all of this. We saw that with NFTs. But what it is a total grab going on now. Anybody and everybody is launching a token to see if they can make some money. And all they're doing is destroying their own market. So the returns of these things go down over time, apart from the ones that actually break out. What they're going to be, who the hell knows? You know, again, we'll find out once we get to the banana zone, we'll really see.
Since its March 2024 bull run, Bitcoin has been consolidating inside a falling parallel channel to a new high record high of about $74,000. Every time Bitcoin encounters resistance from the higher trend line, it retreats in the direction of the lower trend line before rising back above it. As of June 24th, the price of Bitcoin is seeing a similar scenario, declining after reaching the upper trend line at almost $72,000. The Bitcoin USD pair began moving toward the lower trend line 2 weeks ago, and it is currently approaching the psychological support level of $60,000. Remarkably, the $60,000 drawback, the objective is nearer $58,000, which is the 200-day exponential moving average of Bitcoin, often known as the blue wave. This confluence raises the likelihood that Bitcoin will approach the $58,000, $60,000 range in July, according to independent market analyst Teddy Capps. Since the BTC bull run began, every correction has landed on the 21-weekly EMA and bounced off it, so he argues that we are approaching it right now if history repeats itself. This level is historic support for Bitcoin. The base. The current consolidation trend in Bitcoin is consistent with what Michael Novak-Grants, the founder of Galaxy Digital Holdings, said in May. He contended that BTC will trade within the $55,000, $75,000 zone from now until 2024. Novak-Grants anticipates that events in the new market will push prices higher following the stagnation that followed bull runs spurred by the launch of Spot US. The present market stop is due to the positive economic readings from Bitcoin ETF and Bitcoin, as well as waning optimism about the Federal Reserve's plans to decrease interest rates. The $55,000, $75,000 consolidation will persist until an economic slowdown or post-election regulatory clarity in the investor's opinion. Let's back to the Raoul Pal interview.
And we've seen that over the last couple of weeks, right? They just plummet like a stone. Because, you know, it's very emotion driven. If people are seeing the layer ones chopping, consolidating, a few sell-offs here and there, they kind of panic out of the meme stuff. So, you know, you can really see where the risk curve is. But when the banana zone comes, people will just go way too far out the risk curve, and we'll see some really crazy stuff happening then. The election cycle in crypto, now we only have, you know, 4 of these, but they tend to do the same thing, which was early summer into this June period, they tend to chop and fall. Then it tends to just go up, and there'll be a couple of corrections en route. So it should just keep going up again with volatility. So that's why I put out that tweet about Solana. Feels like the low is in. Who knows whether I'm right or not? It feels like the low is in. Sentiment was awful. I think the chances are that it just continues to rise now and then really accelerates as we get into the election. I think people like them. They make people smile. Now, Bonk may have, I mean, Bonk's been doing well overall, but it may have shot itself in the foot by adding utility. Utility normally is the death of a meme coin. And, you know, they've had some sort of DeFi ecosystem around it. Well, Whiff has nothing but a dog with a hat. And it's like, you know, yes, it's ludicrous, but people love the fun of it. Because once you have utility, you can start to value stuff. Once you don't, you just have attention. And then it's a game of how much attention do I capture and how big is that attention? If you have utility on a meme coin, then you end up with a problem because people are like, well, are people using this protocol or are they using this DEX or whatever it's based on? And then they see that they're not. With WIF, they're not using anything. It's the same bloody image attached to a fungible token of which nobody cares.
As opposed to Novak Gratz, the founder of Tanks Research, Marcus Thielen, believes that break out of its consolidation range and decline toward $50,000, citing the possibility of a double top pattern realizing. A double top pattern arises when the price hits two comparable peaks and then slightly declines to retain support above a shared line known as the neckline. This pattern usually disappears when the price drops below the possibly. As we've seen over the last 3 months, range trading is a complicated phase that is frequently characterized by multiple false breakouts. Falling by an amount equal to the distance between the peaks and the neckline, the author noted that topping formations have historically left the typical retail investor exposed, resulting in significant drops in many altcoins. In the meantime, the descending channel range resembles a traditional bull flag pattern, a bullish continuation setup that develops after the price consolidates inside a downward sloping range after a strong price rally bull. When the price breaks above the top trend line and rises by the amount that the prior uptrends conceal, flags usually disappear. This establishes a new record high for the Bitcoin price target of $888,000 as the main upward target for July or August if this bullish scenario comes to pass. In addition, Bitcoin's daily relative strength index is at its highest level of selling since August 2023. This might signal the start of a possible recovery period and increase the likelihood that Bitcoin will reach its bull flag target. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks!